challenges our nation is facing.
Treasury Secretary there. Well, Sky's business editor Michael Wilson is on the trading floor at CMC Markets. And Michael, let's start first of all with this rate at which banks lend to each other, the LIBOR rate it's called, and short-term money, overnight money. The rate's falling a bit there.
Yes, it has fallen a bit, so it shows that something's working. Unfortunately, though, the 3-month figure has actually gone up, which means that basically put the long-term risk is still felt to be fairly high, but short-term looks like there's a bit more cash flow ready to be used in the system. So that's could be said it's this, possibly the start of the whole thing working. Also, the stock market actually we're up about 51, 52 points I think at the moment. Wall Street will open up, according to the futures market, about 131. So generally speaking, and that's sort of in line with all the other European markets in Italy, Madrid, Germany and so on. They are all up by a similar percentage to London. So generally speaking, I suppose you could say there's a bit of stability coming back into the market. Certainly here, and looking at the detail, which people are still mulling over of this huge amount of taxpayers' money and cash flow and liquidity which is being made available for the banking system. That certainly is people are looking at that and thinking, well, the banks actually got quite a reasonable deal and not many strings attached to it. Shareholders of banks actually got a good deal out of it because there had been talk about the government taking warrants, i.e. options to buy shares in the banks at pre-arranged low prices. So as soon as the share price went up, they made a profit. That would have tended to dilute the shareholders' base, and that would have made their own the price of their shares actually drop very, very slightly. Anyway, that didn't happen. So it looks as though the banks have got a fairly good deal. Other side of the coin, though, is this is a lot of money. Public spending will have to rise. I mean, however the Chancellor manages to juggle things in his pre-budget report, it's going to make absolutely compelling viewing because the sums right now look way out of kilter, and also it has to put the prospect of any tax cuts that perhaps should they be an incoming Conservative government would like to do, must push those further away. We are all going to be paying for this for a very long time.
Now, Michael, exactly 24 hours ago, that floor was a buzz. I know because I was there with you when this cut in interest rates, 0.5% cut in interest rates, was announced there. Do they feel there that there's much more of that kind of thing to come? Maybe not coordinated, but that the Bank of England now is on a downward trend with interest rates? Well,
this is a sort of time when you start taking forecasts from economists who you pick your economist, you take your choice, but I've heard a couple saying this morning that we could see rates down to 3.5% by sort of mid next year. It's clearly the sort of medicine that's needed. The problem with it is that inflation is still rising. We'll get the figures next week, and it looks as though inflation will be well above 5%. Now, as you know, the Bank of England's target is 2%, and reducing interest rates when inflation is rising is not the thing to do. However, who said that some bank decisions aren't political? Maybe it was slightly political yesterday because they brought the interest rate down by, in modern terms, a whacking amount by 0.5%, and there will be many calls. There are many calls for them to do a similar kind of thing not too far in the distant future. So I think in general, everything about the market says that interest rates are on the way down. The question is how quickly.
OK, Michael, many thanks. Michael Wilson, live there in the city for us. Well, there are concerns, as we've been saying this morning, for millions of pounds of taxpayers' money invested in Iceland by some British councils. So far, we know that at least 20 local authorities are affected by this. Kent County Council has around £50 million in Icelandic accounts. Barnet's Council in North London has invested £27